Awesome. And I just started recording. All right, cool. So I just want to kind of, give a rundown on how I trade and how it's actually helped me. If you guys have any pairs that you would like me to look over, just type in the chat what pair you would like me to look over. I personally do not trade all these pairs, of course. I just have these pairs up for you guys. Just in case you guys want me to kind of like give a brief analysis on what I see in the market. I only trade about like 2 to 3 pairs, a day. I look for 1 or 2 setups. I try to get in and out of the market, and I try to be finished ASAP. Sometimes, the day is longer. Sometimes my days are shorter. Depends on what the market is looking like. I think the most important thing is finding your setup, taking it. And if you don't see your setup, then don't take it. That's still a struggle for me. And I think we all can get past that. My main pairs is GBP USD, GBP JPY, and I've been struggling between NAS 100 and gold. I love NAS 100 because once it moves, but the pullbacks are really mean. Gold whipsaws a lot, but gold will actually give you, we got some more people coming in. That's awesome. Gold will actually give you, the right amount of pips that you really want every day. Sometimes NAS just, it moves really, 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 quick. And then some days it's just sitting there, Gold to just whipsaws like crazy. So if I had to, trade a couple pairs, for me, it'd be just GU and GJ. I don't do Euro USD no more. I know that's like probably, that's one of the top most manipulative pair. I don't do that no more. That pair just gets on my nerves. You only trade gold and GJ? Yeah, I mean, those are 2 great pairs. It's just gold just whipsaws a lot. I know everybody have a different, amount of strategy to trade gold, because gold is a whipsawing pair. But when it does move, it moves, and it does pay, to be honest. So if you know how to trade gold, I recommend you trading it. Just don't trade it with a small account. US 30. US 30, I like US 30, but it's meaner than NAS 100 and gold put together. So, I mean, shoot, man, US 30 is a beast, man. It'll pay you for a lifetime. If you know how to master that pair, you don't need any pair. I'm serious. You don't need any pair. Like dang, US 30 is like Godzilla. Yeah, US 30 can be a nightmare. So I would just want to kind of start this out like very basic on like how I trade. There's a guy in here. He's one of my best friends. His name is David Chacho. Dang, sorry, bro. I need to stop doing that. I just grew up with this guy, and I just keep calling him that because that's one of his nicknames. David Montoya. He's in this chat, and like we kind of like trade together every day. He's usually a London boy. He has he's starting up something too. So I'm proud of him and where he's going. But like we kind of wake up every day and we kind of like trade together. Also, forgive me if you see anything lagging, guys. Just let me know, because sometimes my computer just like acts slow, and there's some other things that just be loading up. And if you have any pairs you want me to analyze, just let me know. Well, let's get this started. Like one of the ways I trade is, well, let me tell you how I do not trade. And I think a lot of people trade this way. There's nothing wrong trading this way, but I believe since the market is so fragile and so manipulative, I think it's very important that we understand what and expect how the market expects us to trade. The way I do not trade, one of the ways I do not trade is M's and W's. I don't trade M's and W's. Now, some of you guys are asking, why do I not trade M's and W's? Because I've seen in the long run that I have lost more money trading M's and W's than I have just trading structure, psychological levels. That's what I trade. I trade psychological levels. I also do not guess anymore. I don't just sit here and try to predict the market. I'll give you a clear example. We can see that GU is definitely on a 4-hour time frame. We can see GU is ranging right now, right? But overall, GU has been up, correct? So in the long term, you guys are probably thinking, okay, GU is going to be buy. So, you know, let's create this market level structure, which is right here, right? Now, there's nothing wrong doing this. I recommend you doing this because this is actually, you know, giving you, you know, just preparing you for, you know, what your eyes to see. But some people will come in here, you know, create this little, you know, say the markets don't do this, and then come here, break out, come back down, break out again, and then finish off, and that'll be your stop hunt. And somehow GU is just supposed to fall down to this level. I don't believe in that. I don't believe that the market is just going to simply give you that something that easy to trade off, because if it was really that easy, guys, we'll all be doing it. So this is how I trade. The way I trade is I create psychological levels. And I know some of you guys is like, well, Jonah, what you mean psychological levels? Well, psychological levels is like supply and demand. You know, supply is basically you try to you treat demand as support and your supply zone as resistance. Understand? And I think a lot of people do not like trading supply and demand just because they say, oh man, it's very manipulative. Like I said, this market is very fragile, but that's why you have to have discipline and a trading plan in this market. I'm telling you, I'm gonna tell you straight up, if you don't have a trading plan, unless you are a master trader, you're going to fail in trading. Okay, you have to write down your trading plan. You have to write down how much you're going to risk every day. You know, what is your goal? Once you make your goal, get out the market. If you risk too much, stop trading for the day. If you don't see something, stop forcing yourself. I didn't even really trade today. Like this right here is nothing to me. Like there's literally nothing going on in the market as far as Wednesday. Like I can't catch that, you know, even though that you see this big bearish, you know, 3 confirming bearish candles, it's just ranging. I don't trade a ranging market, and I don't force myself into a trade. So I think you guys, I hope that inspires you to kind of like just be patient. Like let the market do the work for you. I had to learn this the hard way. You know, I've blown accounts. I cannot tell you how many accounts I've blown. Probably blown 7 to 8 accounts. Some of the mentors that I rocked with told me they've blown 15, 20 accounts. You know, it comes with, I mean, it comes with, you know, the market. Now, I understand some of you guys have been taught, you know, the market maker method, you know, the I'm not going to say the name of this, you know, mentorship program, but you know, the what you call it. Oh man. So basically like the wedge, and then as soon as it break out in this wedge, you know, of course it's going to come to the high of the day and all of a sudden just drop. Like I said, guys, I do not trade like that. However, what I would say is I use the market as confirmations for my setups. So, all right, let me go ahead and get into this. I think GJ was GU or GJ. We can use USD CAD, I believe. USD CAD is a good one. Let me get this chat box out my way. This is one that I was supposed to trade and I didn't trade. So understand on the 4-hour chart at this time, the market structure was right here, okay? It was playing around in this zone. Now, some of you guys have to understand patience, because the reason why I believe a lot of traders lose is because they are not patient. SPX is good for a small account. Yeah, I don't really trade SPX, but yeah, it's basically the baby pair for small accounts. I mean, if you really want to trade SPX, that's cool. I'm pretty sure you're talking about XPX 500. A lot of people do XPX 500 versus just like starting out. But here's market structure. This, to me, this is a psychological zone. And the reason why is because anywhere the market bounces, anywhere the market, you know, stops at, that's psychological levels. Okay. If you don't know what a psychological level is, I mean, I can draw one like easily right here. You can see how many times the market comes up and touches. I can copy and paste this on this level down here. You can see how many times the market comes and touches this area. You see, these are psychological levels. These are the levels that I trade. Okay. And if I'm telling you, if you discipline yourself to get in and out of the market, I am telling you, you will save yourself from a headache. Now, If you're a swing trader, if you're a day trader, that's totally fine. I'm not against that. You can turn your scalp into a swing. You could turn your scalp into a day trader. It really doesn't matter if you hold your trades or not. It's just all about confirmations and getting in the market, when to get in the market, when to get out the market. You know, there's ways that if you don't want to get out the market, we call it trail and stop. You can definitely trail and stop. Okay, we have a beginner in here. Okay, cool. If you have any questions, let me know, man. So those are the psychological levels that I trade. But let's just go back to USD CAD. This is very simple, guys. Like, a lot of people will see, this is what happens, and this is what gets you in trouble, is at these psychological levels, you would think just because the market bounced here, you would think that the market will come here and buy at this demand zone, correct? Let me tell you something. We do not just buy off a demand zone. We do not just sit here and just wait for price to just buy on demand zone. We see what price does. We wait for price, we wait for the price to actually do what we would like to see it do. Okay. Now, there's a lot of times where buyers get faked out. You see, obviously, the market is consolidating right here, which in my opinion, the market is definitely faking out buyers and definitely trying to trap buyers. The market can definitely consolidate in this area and could have just pushed up and then just came right back down. So I'm not looking for buys. Why? Well, first off, the first thing you want to do is you want to make sure that you want to know the overall direction of the market. Okay. If the market is trending down, either on a daily, I don't go weekly and monthly as much anymore just because I'm not a swing trader, but you can use that as a long-term trade if you really want to. So if you really want to look at the overall market and just wait to get in the market, that's totally fine. But I look at the 4 hour. The highest I go now is the daily. I look at the 4 hour and the 1 hour. I use the 1 hour, 30-minute, and 15-minute time frame as my entries. I don't use the 5-minute time frame, and here's the reason why I do not use a 5-minute time frame anymore. The reason why I do not use the 5-minute time frame is because there's a lot of fake outs. Okay, you have to be careful with the fake outs. Okay, so we can all agree that USD CAD is on a big bearish momentum, right? A lot of people will be like, oh, well, that's what we want. We want to buy low, sell high. Not all the time. You have to understand when the market does what it wants to do, you take what it gives you. Okay. So I'm going to teach you guys what I do, how I enter. And look, before I even go on, this is what you guys need to understand. You have to understand that whatever you're willing to risk, be willing to risk it and be fine losing it. Okay. So if you go into a trade, let's just say you have $100 account or $200 account, and let's just say that you wanted to risk $50 of that $200 account. Okay, you have to be fine losing that money. Remember, the market does not promise you anything. Okay, you have to be fine losing that money. So if you're not okay losing $50, don't get into the market. Okay, do not get into the market. Hold on for just one second. I had one of my business partners calling me. All right. So what I do here, this is on a psychological level. Okay, it's obviously bearish momentum. Now, a lot of people are waiting for the market right here in this zone to buy. Okay. Now, there's two ways you can enter the market. One, you can do what I did, put a psychological level, excuse me, I said psychological level. You could put a rectangular box on this level of structure, or you could just simply draw a trend line and wait for it to break. Okay, that's two ways that I trade the market. Okay, simple and easy, guys. Let me ask you guys something. How many times that when you entered into the market, you wanted to hold it for so long and you ended up being in profit for like 20, 30 pips, even sometimes 50 pips, and then all of a sudden the market turns around and stops you out? Let me ask you that question again. How many times have you guys have entered the market and the market has turned around after like 20, 30 pips and just like stopped you out? Yes, that's trading view. or you put your stop loss at break even. Exactly, right, Diego? It happens all the time. I'm sitting here seeing blues a lot, right? Yes, Tony, a lot. I'm sitting here seeing blues. Dude, I could be $200 up. And I'm like, man, yes. And I'm over here trying to hit my my profit target. But I'm sitting here looking at $200. And I'm like, why do I not take this profit and just compound the market? You see, the market wants you. Yes, 80% of the time. Yes. And I think that's the reason why a lot of people get so frustrated for it. The market wants you to hold your trades, guys, because they know where the liquidity is. We will get into liquidity later, but a lot of times the market wants you to hold your trades so they can reverse on you and take you out, okay? We do not want to be on that side, all right? So then again, I make my levels very precise, okay? So on this, if you want to draw a horizontal, ray, make it very clear on when you want to sell, okay? Now watch. What just happened? Hold on, fellas. There it goes. Okay. Go a little closer. Anytime the market does a break, now this is the 1 hour, okay? You don't have to do this on the 1 hour. I usually do it on a 30-minute time frame in the 1 hour. Anytime the market breaks the level of structure, wait for a close, okay? If you really want to be careful, just wait on the closure of a bearish candle. Now, what's even better is if you see a bearish candle with this wick to the downside, it's even better because usually that shows a candle of continuation, okay? So if you're an aggressive trader and you're like, hey, I just see a break, well, I obviously want you to be very careful in doing that. But if you do that, make sure that you put your stop loss above structure, okay? This is simple, guys. This is all I do. And this is not hard. This is not rocket science. All I do is once I see this closure of the bearish candle, I get in immediately on the next candle. Now, I could wait for the market to pull back, get in, and then wait for it to, or wait for it to sell. But sometimes, usually I just get in the market, sometimes I just get in at the open of this candle right here. And where's my stop loss? Right above structure. That is not my entry. Hold on, guys. Right above structure, okay? And that's usually, now this is the 1 hour, okay? So the pips might be a little bit bigger. This is a 23 pip stop loss, okay? And if you roll it on the way down, let me back out here. You would have at least, whoa. You would have at least caught actually over 100 pips. 100 pips, guys. Now look, we're not aiming for 100 pips, okay? If you want to aim for 100 pips, I advise you to trail and stop. The way I trade now is if I'm at, let's just say, if the market gets into profit, right, and I'm up like $200 for the day, and I'm like, okay, I want to close out my positions at $200. Well, I put my stop loss into profit at $200, and then if the market continues to go, then I trail and stop. Okay, I move my stop loss more and more into profit until the market decides to take me out. Okay, now what I would say is this, guys. What if the market broke, came back, broke, came back up, and closed in structure? Then there's two things that I'm thinking about. One, the trade was invalid, and two, we can now look for buys. Now, when I mean we look for buy, that does not mean instantly you start looking for buys, okay? Because a lot of times there's these W's that happen, we get faked out, and boom, that's why I'm in the market for 20, 30 pips and I'm out, okay? Because a lot of times you can get faked out. So that's why I'm telling you guys, be careful and just get into the market too early, okay? I still struggle with this. And look, if you want to be confident and aggressive in that, that's fine. Because honestly, I won a good amount of profit being aggressive and not even waiting on the closure of candle. Because sometimes the market is obvious. But sometimes, hey, if you get in the market, just accept the risk of a loss. And I mean, that's just the way of the game, guys. But here's what I do. if I see that the market is breaking, right, then it does this. How do I determine when to get into as buys? Watch this. So a lot of people would be trying to get in down here, right, and put their stop loss, when they have no idea that sometimes the market does that and then does this and stops all those buyers out who entered off this W. This is the reason why we do not trade M's and W's. It's so manipulative. You see it a lot on Euro USD. You see it a lot on, especially on GBP pairs. Like, it's ridiculous. So this is the reason why we do not trade M's and W's. So what I do is I do this. When I see a buy happening like that, okay, easy. Okay, cool. I'll wait. You know, I get you. Look, guys, we trade what the market gives us. You wait. Some of you guys, man, I don't want to wait, man. What, I want to like hurry up and make this money. Well, don't get mad when you keep blowing accounts. Do not get mad when every time you risk and the market goes in the wrong direction and takes you out, you blame somebody else. I'm not, and this is what I do not want you guys to do. I don't want you guys copying me. Yes, we get paid to wait. I don't want you guys copying me. If I enter into the trade, go look at this, okay? If I enter into USD CAD sales and I say, hey guys, I'm selling USD CAD, I'm having a 20, 30 pip stop loss, go do the research yourself. Go say, okay, look and say, and it's okay if you disagree with me, okay? Now I might question, why do you disagree with me? If I win this trade, I'm not about to sit here and show my profits. And please, number one thing, guys, please don't be showing y'all's profits. Okay, please don't come in the group showing how much you in the blues. If you got friends that you want to do that for or with, that's fine. But please don't do that in the chat, because we're not here to brag. We're here to help each other. If you guys have analysis, you definitely can go in the chat. And well, if you're not a part of this mentorship program, of course you're not. You're not in our chat. But for those who are in the chat, if you have analysis you want to share, I'm all up for it. It's fine. Nobody's 100% correct in this market. All right. But when I enter into the market, I want you guys to go back, do your research and say, you know what, this looks like a good place to sell or a good place to buy. Okay. So when the market comes up, what we're looking for is, I love the way that me and my best friend, we always sit here and say, hey, let's wait for the market to get in here. And he knows it, because sometimes I'll get in the market too early. He'd be like, nah, that's too early. I'm like, nah, that ain't too early. Nah, that's too early. And then just the other day, I got in the gold too early. I got stopped out. It wasn't a lot, but at the same time, he was right. It was too early. So what we do is we see this happen, break W. Okay, we want it to break structure here. Okay, once it breaks structure and it closes above, then you can enter, put your stop loss, or you can wait for this retest to happen down here. And once this market starts going back up, you can buy. Also, if the market starts going back up and you have not entered yet, you can wait for it to pass the closure of that candle or put a buy stop there. And once it heads up, you put your stop loss below structure and just ride it up to this next zone, 10, 20, 30 pips, or ride it up to this next zone. Guys, it's that simple. That's how we trade. And look, if we don't see the setup, don't force it. Because I remember, I think a couple of weeks ago, I forced a couple of trades and I lost big time, and it sucked. Thank God I got it back. But still, like, I don't want to go into that habit of forcing myself in the trade. Today was a no-brainer. I didn't have to trade today. I might have entered 1 or 2 trades, probably lost like $5, $10 just because I was risking very small, because I ain't really seen nothing. I was like, nah, you know what? I ain't gonna force it. Okay. All right, 1 second. You wanted me to take a look at gold? All right, cool. All right, hold on. Let me see if I could. Chacha, let me see if I can unmute you right quick. Let's see participants in the chat. Can you unmute yourself now?
Hey, Jonah, can you hear me?
Yeah, I can hear you.
Hey, guys. Good job so far, Jonah. But if you keep it right here, right quick, I just want to say one quick thing based off of what you was going through. It's perfect what you were saying. A lot of people, whenever they get to this support and resistance zones, they think automatically, oh, it gets to that zone, let me buy. It gets to a resistance, let me sell. Guys, remember one thing while you're trading. You never want to sell into support. You never want to buy into resistance. You sell once it breaks that support. You buy once it breaks that resistance. Don't sell into support. Don't buy into resistance. Just keep that as a note to yourself there. But that's basically all I wanted to say right there, Jonah. Oh, and
Perfect.
I really like the way that you explained this little cell right here. One way I also would have looked at it, and you kind of drew it up too whenever you did your trend line upwards there before it broke that trend line. You could see before that consolidation period right there, what do you got? You got a big impulsive move downwards. Okay. I have a strategy where when I see these impulse moves, especially on the higher time frame, impulse move, correction upwards, that's giving you a sign, guys, that it's going to go back down. Okay. Same thing backwards. You get an impulse move upwards and a correction downwards, it's going to go back up 80% of the times. Okay. So that's set up perfectly for some strategies that Jonah and I rock. Impulsive move downward, correction upwards, break of structure, perfect trade to get into.
Absolutely. And is that all you had?
Yep.
Good. Perfect, man. I appreciate that, bro. And oh, snap. Yeah, and if you guys are new to this, I think there was one fellow in here that was said they were new. Like I said, if you have any questions, please, ask away. We don't expect you to get this 100%, but it is kind of simple, as easy as 1, 2, 3. But at the same time, the market is fragile. So even though it's simple, trading is simple, you make of it what you make of it. Your best, I once heard this before, your best indicator is your eyes. Okay. We'll get into, pivot points later. I have these, right here called pivot points. We'll get into those later. I'm not going to teach that right now. I do use, moving average. I use the 200. Sometimes I use the 50, but mainly the 200. But besides that, I rarely use anything, just structure, because I'm going to check out gold here in a second, guys, because here's the thing. When you guys put so many indicators on your charts, no matter how much of a help they are to you, they can still get in the way. It's like temptation. You don't want to always use something that might get in the way. Just look at the market, what it gives you, and just go with that. All right, you said gold on a 30-minute. Oh, snap. Let me give you a piece of my advice. I like using session breaks. Okay. So session breaks tell you when the start and the end of the day is. Okay. Obviously, let me give you this. Today is Wednesday, but basically, since the session break just ended, it's Wednesday going into Thursday. Okay. So let's do this right quick. All right. So this is Thursday. And this day is Wednesday. Okay, so if you guys like to mark up your, psychological levels, you can say, okay, yesterday's high obviously ended right here, and yesterday's low. Let me just go ahead and delete this for those who are new. Is actually right here. This area right here was yesterday's low. You see how on Tuesday's low, which is right here, the market came back down, retested that low, and created a W. Like I said, guys, I'm not completely against M's and W's. You can trade this M's and W's and completely put your stop loss right there. Like soon as this market had engulfed, hold on for a second. As soon as this candle right here has this big bullish, see, this is what I look for. I look for these big, massive, engulfing candles. As soon as this candle has completely engulfed the previous candle, which is this red candle right here, then I'll be looking for buys. But like I said, your stop loss will be pretty big, so you might want to wait on a retest or just wait, like I said, for structure to simply break, which would have been for me before I get into gold, guys. I'm sorry. Right here. Okay. And look how perfectly, look guys, look how perfectly gold, I didn't even see that myself. Look how perfectly gold breaks the structure, comes back down and retests this zone. And you could have got, let me see, your stop loss right here. You could have got 10, 20, 30, 40, 50, 60, 70, yep, 70 pips. All right. So you said on a 30-minute time frame, gold is at resistance level, right? In my opinion, I think it's still going to buy. I think they're expecting people to sell here. Like I said, this is just my opinion. You can wait, like I said, yeah, I'm waiting on Canada closure. Yeah, you can wait on that closure. Let me look at the 15-minute just to see what it's doing. Yeah, to me, this looks like it's in to me, it looks like it's inducing sellers, just because you have this big impulsive up move from the W. And now you see how you have two big bullish candles like rallying up. So if I would want to sell this market, I will wait for the market to close bearish like this, and then I can look for sales, but besides that, it doesn't look too promising. It looks pretty bullish right now. I think that the market is going to come finish up here. Now, if it does sell, I think it will sell just to create another higher low and then continue back up, and then by NFP, it'll probably come around here. You know how NFP is. And this is what I want to give you guys a sauce on NFP. Oh, that's your bias? Good, bro. NFP usually has to pick, or usually it doesn't have to pick, but usually it picks a zone, a psychological level where the market wants to reverse. Okay, it does the same thing every single time. So if the market comes up here, expect sales. If the market comes below, expect buys. Okay, on NFP. Do you guys have any other questions? Do you have any pairs you would like me to look at? Just remember this, guys. Trade what the market gives you. Okay, trade what the market gives you. Oh, GU is one of my favorite pairs, and I do not like it. You see stuff like this, I just stay away from. Another thing, guys, I want to give you the sauce on. Let me go ahead and get this out right here. If you see ranging market like this, just draw a consolidated box. Okay, look at the next high, and boom, wait for price to mess around in that area. Okay, and if the market tends to break out of this area, wait for a retest and just buy to the next area, which is right here. Okay, if we make this thing simple as possible, it'd be great. I'm telling you guys, a lot of people who trade M's and W's have actually frustrated themselves so much and even quit Forex. Okay, I even know this guy, his name is Luke. He's one of my mentors. He's a swing trader, and one of the things he taught me is when the market does this, right, sometimes it gives you that retest, goes down, but for those who are holding the liquidity zones, which is people's stop losses, is all the way up here, it'll come right back up. Okay, you see how funny it just created this W right here, even though this looks like a valid M. This is the reason why we do not trade M's and W's. But what I do trade is if this M does happen, okay, all right, it broke level structure right here. Even if it breaks structure right here, then I'll wait for a retest and then continue down. And then that's when I enter the market. Okay. Now you can do this on any time frame. I just recommend you not to do it on those lower time frames, 5 minutes and 1 minute, 3 minutes. So can you explain rules on how you draw your zones? Show more examples. Absolutely. So which is a pair that I actually did very well on. Was it GJ? And where is my GJ? There it is. It's my bad boy right there. Okay. I don't think it was GJ. I'm pretty sure it's GU. I didn't trade GU much this week. I think it was last week. But this is one of the trades I actually got into. So for example, we know that Let me draw on a 4-hour time frame right quick. Like I said, guys, I always go on the 4-hour time frame. Okay, I always go on the 4-hour time frame, and I make sure I know where my psychological level zones are. Draw this right here so I know where I'm at. Okay, yep, right here. All right. So we see that the market messes around a lot in this area. Okay, this is a psychological level. All right. So what I was waiting for the market to get down here and retest this area and see what it would do. Okay. If the market was going to, break this area, then I'm waiting on a retest and then a continuation. If not, then I'm waiting for a big buy. Okay. You can also show them on. Yeah, absolutely. And I hate those pairs too, but absolutely. So let me show you how it's done. Whoa, what happened here? Okay, cool. Hold on, guys. This chat is in the way. There it is. Okay, so scribble down low. Sheesh. So what I did, I was actually asleep at this time, and I actually, I actually woke up right in time when this happened. Okay, so I said, I wanted the market to come down to this low, and see what it was going to do, see what price was actually going to do. If it was going to break, of course, I'm going to look for sales, and if it was going to buy, what I did is I'll wait for market to do what? To come up here and completely break it. Okay. Why? Because at the end of the day, what is the market doing? It's creating a W. Okay. Well, John, I thought you guys, I thought you was talking about selling the market in a big downtrend. We got to realize this. It's not just about the overall direction. The overall direction is going to help you understand when and when not to trade. So if you see that it's selling hard, you're probably looking for more sales. But this is just telling you if the market chooses to reverse, what we'll do. Okay. Of course, GU's in big buys, but at this moment, it was selling really hard. Okay. Now, this is a W, right? So once again, what do we do? This is on a 30-minute time frame, and this is a 30-minute candle. Okay. Even if you was just to put this down a little bit, I woke up and these two candles completely engulfed these previous candles right here. Okay. Anytime I see that happen, I look for buys. Okay. It's the same thing with sales. If I see an M formation happen like that, I look for sales. Now, what I do is I don't just buy automatically. I wait for a retest. Okay. So obviously the market bought, it came right back down and retested this area. That's when I entered, put my stop loss below the structure and just rolled it on up. Okay. Is literally that simple, guys. I can show you one right here. This is actually one I think I took as well. I think it was right here. All right. I think it was right here. Was it? Hold on for a second, guys. I want to make sure. Because I remember putting a trend line on something. I think this is what happened. Let me see this trend line. I usually don't use too much of a trend line. Okay, yeah, I think this was it right here. This was it right here. Yeah. So it was not this area. Okay, yeah. So right here, okay, you see all this structure, you see all this wicks, okay? Now the market is playing around in this area, okay? I like to put my, I definitely like to put my psychological levels in this area, okay? So the market was playing around in this area, all right? It was playing around in this area, right? All it did was just playing around, and what is it doing? It was just consolidating, okay? Now, like I said, it's not always going to be clean, guys. So what I do is I just mark it up. I'm like, you know what? I'll just wait for this bad boy to bust out one way, okay? Now, I don't do this. Okay. One thing I don't do, guys, I don't say, oh, it's going to do these. It's going to do one of these things. I don't do that. The market can do anything. I just wait for my confirmations and I take what the market gives me. Okay. So all I do, I box that up, went on 30-minute time frame. Okay. The market, of course, what did it do? Think about this. 1, 2, 3, 4. The market comes up, busts a little bit back down, and then decides to break, right? Of course, it's inducing sellers, right? So once this market broke, this is 2 things you can do. 1, you can go ahead and enter a long position and put your stop loss right below that candle, okay? For you, you would have got 30 pips. You would have ate 30 pips that quick. I'm telling you guys, I'm not making this up. When GU busts out, it busts out. Now, if you're waiting on a closure of a candle, okay? If you're waiting on a closure of a candle, I'm going to say this again. You could put a buy stop right here. You can see where the market came down and it went right back up, okay? Once that market went back up, you could have bought again. Simple, guys. It's not always simple when it's live, but it is simple. That would have been your 10 pip stop loss. You would have got, if you went to this high, 30 pips. Okay. And you just do the same thing over and over and over again, but you have to wait. Okay. Like I said, I showed you aggressive side. If you wait for that closure, you just want to enter on that, on that candle, then go ahead. If you just want to wait for the market to pull back some and then wait for it to pass the closure of this engulfing candle, then boom, you're in profit. And I'm gonna say it like this: if you lose, you lose. Okay, you win to trade another day. That's as simple as it gets. So that's one of my examples. You said you can also show them GPP, GA, EA. Okay. And you said GBP pairs, sometimes you have to take impulsive entries because not always give. Yes, honestly, dude, I don't recommend you guys doing this, but a lot of times when GBP USD just flipping flies, I usually get, once the market is showing this bullish momentum and for a fact the market is about to, the candlestick is about to close, I just go ahead and get in and I just go ahead and put my stop loss below. Now, like you said, yeah, advanced entries. That's if you have been doing this for a while. If you're a beginner, please don't do this. Just wait, okay? You say you're Australian. Me and David, the guy that you just heard talking, got into this trade. This is one good one right here, okay? We got into this trade right here. Hey, and guys, you can literally adjust your levels as big as you want, okay? Make it clear for you. So we decided to kind of like take this. We took the sale a little early just because we saw this wick to the top, but we was very confident that once this bearish candle completely engulfed this candle right here, this bullish candle, then we got in. And once we got in to this market, we put our stop loss right above this candle. Well, my stop loss was, above this candle, and I was going to ride it down all the way down, which I got this profit, rode it right all the way down to my next level of structure. Now, what you could have done is what? You could have waited, because remember, we don't trade just any M's and W's. Like I said, we did it because we are more experienced with it, okay? But I recommend for you to wait for it to break this level, because sometimes what does the market do? It wants to show its tail off, right? It wants to do this, come back down and just whipsaw you, okay, and take you out. We don't want that, guys. So wait for the market to come down here, right? And soon as it broke this level, which it did this morning, this is your next psychological level, okay? So you could have drawn on this next zone and be like, okay, this is what I'm gonna do. If the market decides to break this area, then what I'm gonna do is I'm gonna enter on a short position, which was right here on this candle, okay, and write it down. Darn it. Hold on, guys. Write it down to this next zone. This is the reason why we call it zone to zone strategy. Okay. So you would have had literally a 20 pip stop loss, and you would have gained 57 pips off this trade. You would have been done for the day. Okay. Leave the market alone. Lastly, leave the market alone, man. Okay. Don't be like, man, it's going to keep going, man. I want to enter the market. Trust me. Leave it alone. I don't care if it goes another 100 pips. Leave it alone. Okay. You made your money and you go. All right. You said, yes, as long as you manage your risk. Like I said, guys, look, I'm going to give you an example. You can trade $10 per pip, right? And then 30 pips, you'll be $300 up in profit. You'll take that profit, right? But then you can lose 20 pips, right? And you lose $200. Well, you're still $100 up in profit. As long as you are doing good risk management, your wins, as long as you're winning, your wins are going to always outweigh your losses if you're doing proper risk management. Okay. If you trade 10 times out of the day, right, and you're risking $10 every day, right? You risk $10 every day, right? Let's just say you lost 4 of those trades, right? Well, okay, you lost $40. Well, if you won 6 of those trades, that means you won $60, which means what? You're still, excuse me, if you won 6 of these trades, you won $60, which means you're $20 up in profit. Profit is profit. As long as you are up in profit, you're good. So I'm telling you, if you do this with bigger lots and get nasty with it, I'm telling you guys, your profits could be big. You know, you could be down on a super big account, you could be down $4,000 for the week, but then end up in profit $20,000 at the end of the month. I'm telling you, that's why proper risk management is so important. You can have a losing week, but a winning month. Okay. Yep, I do the same thing. I only trade 1 to 2 trades a day. Like I said, sometimes I get a little messy and I'm like, I be on fire. I'm not gonna lie. And then all of a sudden I'm like, oh, I need to stop. And then sometimes, like, I just like, dang, I lost this trade and I just need to stop trading. We can go from trend line some other time. We can do trend line breaks. I don't use trend lines too much, but I use it for extra confirmations. Okay. Like I said, I gave you that one on USD CAD, but if you want to do something like this, I'm just going to give you a little intro to it. I'm not really going to, tell you. If you want to do something like this, wait for the market to break. You could have sold right here. Oh, one last thing, and I'm gonna leave it be to you guys. If you guys want to ask more questions, I'll feel free, and if not, we can end it. So this is crazy. If you are patient enough to do trend line breaks, I promise you, I used to do this all the time. I'm gonna tell you how many trend line breaks you could have had. Okay, that's one, and these are like precise entries. Okay. I shared this with my friend just the other day. Precise entries. If you just wait for the market to give what it gives you, you see how many times you could have been up in profit. Okay. And at least these would have went at least 30 to 50 pips every single day. So these are trend line breaks, guys. It's the same thing. If you see that the market is switching direction at sells, put a trend line on that bad boy. Trend line. Okay. Probably tomorrow, trend line. Okay. And once those trend lines break, aim for the low, aim for, like if it sells, aim for the low as your TPs. All right. If it breaks to the high, aim for the next high as your TPs. Okay. So, I mean, it's just simple as that. But like I said, we'll get into that some other time. So you and David get prior to London or at the Open. I can't do London. I'll be dead during the day. Bro, I'm telling you, man. I feel you, bro. I mean, I'll wake up at London, but I don't do it every day. Because this is just me. I don't think properly when I'm up that early. I need my rest. I do a lot during the day. I drive a lot. I got other businesses to run. And it just takes a lot of toll, and I always want to sleep. I hate always wanting to sleep. Like I take naps, but then when I take naps, longer than usual, and have to be up. So as much as I would love to trade London all the time, I don't do it all the time. But tomorrow I will be posting a Zoom link in the chat before news tomorrow. I think GPP, Brexit news, which is our time, 7. I think it's at 7. Yeah, 7 o'clock. So I would definitely put a Zoom link in the chat around 6:45, so 15 minutes prior before news. That is pre New York, but I do usually do pre New York. Yes, I do usually do pre New York. I love pre New York. It's the perfect time sometimes to even actually enter into the trade before New York session actually starts. Yeah, David is definitely up at 2 a.m. to 4:30. Now, I do usually, when I get up on London, if I see a trade, I'll take it. I'll take my tail right back to sleep. But like I said, if you wake up at London and trade, do your best to just, take the trade. Once you make your profit, don't worry about waking up in New York. Okay, just keep your profits. Yeah, bro, you did that. Oh, whew, yeah, that. Yeah. Keeping it holy. Keeping it holy in the chat. All right, guys. Do you guys have any other questions? All right. If you are not a part of my mentorship program, like I said, I don't want to say this as a way of saying mentorship as like, you are a hostage or, do we get homework? I mean, yeah, the homework is find your psychological levels. Okay. This is what I want you guys to start doing. Okay. Since you mentioned homework, go on a daily time frame. Okay. And look for obvious level of structure. Even if you guys have to put a horizontal line here, I don't like Euro USD. Let me use GBP USD, for example. Just put your levels here, okay? If you have to go down to a smaller time frame, be like, I don't like this, I don't like the, bigger, smaller time frame, okay? Well, cool then, do it on a smaller time frame, okay? And see where price is touching. Every time price touches these areas, like go on the lower time frames and see what you can do with it, okay? Now, do I obviously just trade like that? No, but what I'm saying is if you do it like this, you're training your eyes to see how structure is reacting off of these psychological levels, like perfectly right here. I put the zone exactly on a psychological level. I didn't even know that it was perfectly touching on a lower time frame. Okay. So you guys could have, ate off of this. Okay. So like I said, that's your homework. Your homework is find these psychological levels. Okay. Yep. And the last thing, if you guys cannot find anything, don't mess with the market. Okay, leave it alone. All right. I mean, right now I'm leaving GBP USD alone. I see absolutely nothing I can trade. The only thing I can do is this. This is the only thing I can do. And honestly, the only thing I can do, with that is I will want to see GU probably bust down a little bit and then break out, and then I'll buy. But I try to stay away from, all this consolidation right here. Okay. Yeah. Yeah. Don't overtrade. Please don't overtrade, guys. I would say this: tomorrow is going to be a big day. Trust me. The market is going to go to its biggest psychological level. And if you want to go ahead and here, I do this. Right now, I believe that GU is going, and I could be wrong, like I said, but I think GU is going to get up here, clear these highs. Because if you think about it, I have a swing trader mindset still. So, it's the market is still overall down. Okay. GBP USD may come up and just tank. And by the end of by the beginning of the next week, it can literally like do a big reversal to the upside again. But this market right here, you have all this liquidity still to the upside. Okay. So I'm pretty sure during NFP, since it's a new month, I really believe that the market may come up to this area right here. So definitely be looking for buys, and then by NFP, you know, it can sell. Okay. And that's when we can get our bread and get in and out the market. So do you look at the daily chart? Yes, I do look at the daily chart for sure. I only now if you're talking about, like, you know, as far as analysis wise, I look at the daily chart. Here's how I look at the daily chart. Okay. And I don't complicate anything. Not at all. If I'm to look at the daily chart, I'm gonna scroll this down a little bit and I'm gonna tell you exactly what I want to see. Okay. I can literally put a trend line right here. Okay. And do just exactly this. Okay. So obviously, what am I seeing? The market is bullish. Okay. So that's how I look at daily time frame. I try not to go in the daily time frame and, you know, do mark up all these analysis or anything. If it's anything, I either do a trend line or I literally say, you know, hey, you know, boom, here's the demand zone right here. Okay. The market's going to buy off this area. Okay. And if you just auto correct it, boom, look, it did exactly that. So that's how I look up the daily time frame. I don't like just do straight analysis from it. So expect, to be honest, guys, expect GU to definitely come to these highs right here before actually reversing on NFP. I really think that this market is buying, and you're probably looking at let me see. So if it breaks this level right here, guys, we're golding for 100 and something pips. All right. I'm not gonna lie. This is 100 something pip trade. Okay. If it breaks this level right here, you can go ahead and, you know, if you taking notes, right at 140, basically right at 140 area. If it breaks this level right here, guys, you can go ahead and like look for buys and ride it all the way up to NFP. So y'all love y'all some gold, boy. Yep, see, look at that already. You know, I ain't fooling with gold. I don't trade Asian session like I used to. If y'all want to, go ahead. But if you're going to trade this, wait for this candlestick to close. We have about 25 more minutes left for this candlestick can close. Wait for a retest, buy, or just put your stop loss right below there. You know this bad boy be wicking like a mug, so just be careful. That's a 20 pip stop loss actually for gold. So yeah, I mean, buys aren't, to be honest, I'm not gonna lie, buys aren't bad right now, but this could be a little fake out to the high and just sell down a little bit and then bust right back up. So just be careful with that. I don't want to mess with gold on right now, even though I ain't gonna lie, Asian is a really good time to enter the market going into London. But I mean, there's a lot of high probability fake outs too. So you we all know you mess with gold. The gold whisper. All right, guys. I'm done. That's today's, you know, Q&A session, people. Like, again, if you are not a part of this mentorship program, let me go ahead and finish this. What I was trying to say is, look, guys, I'm just here to help you. I'm not here to like sit here and talk your head off about M's and W's, you know, and all this, you know, psychological stuff. I'm just here to like simply tell you how we trade, and I just want you guys to be successful. Okay. Yeah, my throat is dry because I've been drinking some frappuccino. I'm probably not even gonna go to sleep tonight because of that. And don't tell me to stay in London, Josh. So yeah, gold is on its way up. If you wanna, I'm not telling y'all to buy because don't. And oh yeah, and please, guys, look, if you're in the program and you buy because I buy, don't blame me. Blame yourself. You're the only one that presses that button. If you buy to these highs, you can even put your stop loss below here. This is a big stop loss. I would not recommend that, of course, unless you are using a very small lot, okay? But put your stop loss below this candle. But in my opinion, I'm not trading this. I'm waiting for London or New York. I'm gonna wake up about perfect to you, London. I'm gonna wake up about 6, I think pre New York, London. I think gold has a potential to just keep shooting. If not, it did create the low for Asian, and it might come back here and then boom, finish on out. But y'all do what y'all want to do. If you guys have any other questions, I'm gonna go ahead and cut it off. If you absolutely, brother, if you guys have any friends that want to join this program, let me know. Definitely want to do live almost every day. If not, hey, there's sometimes, you know, life happens. We all got things to do. I'll let you know if we can't. Yeah, invite your friends. Like I said, $100 for a lifetime. That's not charging that much. I know a lot of mentors who charge way much more, and students who aren't really even succeeding in the group. $100 for a lifetime. But then after that is closed off, like I'm gonna do $30 a month. And then it can go up to $50 a month, and that'll be the max. But right now, $100 for a lifetime. For those who aren't in my group, I will send out a Zoom link tomorrow. So if you guys want to join, you guys can join again, and you know, your friends and all that stuff. So you got free. I'll give you access to that. So yeah, absolutely, brother. I'll send the link to everybody again. Like I said, invite your friends, invite your people. This is recorded, and I will send the recorded link in the group chat tomorrow. All right, y'all take it easy.